Okay, I promised a step in this process that would help you be excited for tax time next year, and here it is. So, what we're going to do, some of the information here has already been added because of your business expense tab. So, what we're going to do here is plug in the numbers in the yellow cells. So, what is your anticipated gross business income? So, what do you think you're going to generate from your business as a whole in the whole calendar year or whatever your business year is if you've got a different year? So you're going to plug that in cell B2. So let's say you're going to make 65,000 as an estimate. So what that's going to do then, we're looking at your business expenses here. So based on the information you put in, we've got estimated business expenses of $13,920. And then that's going to leave you with a net business income of $51,080. So the next step is important. So getting an estimate for your tax percentage. So talking to your accountant, if you do your own taxes, looking back at previous years and looking at what tax percentage you have been paying. So was it 10%? Was it 40%? The number is going to vary based on your specific situation, and it's going to be relevant to your income. So you talk to your accountant and they give you an estimate of 20%, a tax rate that you've paid in previous years. So that's going to calculate what it anticipates you will owe in taxes based on this guesstimate situation that we've got here. So I've got in cell B9, it's calculating your tax percentage as a percentage of your gross income. So this is going to be different than how you may have looked at it in the past, or maybe you didn't even look at it at all and you just waited for tax time to figure it out. That is the case for many of my clients. So what this means is that the amount that you would owe based on this scenario and these estimates for taxes is 15.72% of that $65,000. So the reason I like to look at it as the percentage of your gross income versus a percentage of your net income is because that calculation of expenses is a barrier. So if you can see every month you make this much and you calculate your percentage and that's exactly what you should transfer to your tax savings account, it just saves a step and breaks down a barrier. One thing that I do recommend is not saving exactly 15.72%. So maybe you want to put a number in here to make it a round number. Maybe you just want to add an extra 2%. So whatever you want to add in here, just put that in. So 2%. And I always recommend having a little bit of a buffer so that this is when you get excited about tax time. So if you're supposed to save 15.72% and you're saving 17.72%, if your tax situation doesn't change a lot and you had some really good estimates in there, that's going to mean that you're going to have an extra amount in that account saved that you can pay yourself an extra bonus of tax time out of that savings account. Okay, so in rows 19 and 20, what this is this. So if you want to transfer the amount to your savings account once a month, you're looking at your business income, your business gross income once a month, you can plug this information in here. So say you had a business income a month of $3,500. It's going to look at that 7.72% and calculate what 7.72% of $3,500 in, and that's the amount you transfer to your savings account. So sounds pretty easy and straightforward, doesn't it? Probably not. But you can do this. This is the first step to being excited for tax time. So I hope that was helpful, and please stay tuned. I look forward to seeing you soon in future videos.